Most beginners fail because they make trading too complex. You don't need 10 indicators to be profitable. Today, I'll show you the simplest strategy, the 15-minute setup. It's stable, logical, and useful. I'll use the 4W1H framework to give you the complete logic and execution. Before we start, make sure to subscribe and like this video. Why should you choose the 15M setup? There are three main reasons. First, it is an extremely straightforward and replicable strategy. Second, you don't need a screen full of indicators. All you need is one single candle and wait for the signal. Third, anyone can master it, regardless of experience. What is this strategy exactly? It's a momentum-based system built on the first 15-minute range of the market. Specifically, we mark the high and low of the 9:30 candle. By doing this, you've already completed 70% of the strategy. This range allows us to judge if a breakout is valid, whether you use the 1-minute, 5-minute, or 15-minute time frame. In this video, I'll focus on the 15-minute setup. When is the best time to use this? Since this is a momentum strategy, we must trade when the market is most active. Not London, not Asia. The golden window is the New York session from 9:30 to 11:30 a.m. During these 120 minutes, volume and volatility are at their peak. After this period, the effectiveness drops significantly as the market loses energy. And the final W. Where do we enter and exit? There are two ways: aggressive and conservative. An aggressive entry buys the breakout immediately. Sometimes you'll run into a fake breakout, just like this. However, for this video, I will focus on the conservative entry, which is the retest. Here are three key points to note when executing pullback trades. That brings me a high win rate. First, you must wait for confirmation from a key candlestick, like an FVG. Treat this as a critical breakout signal and avoid chasing the price immediately. Second, after the key candlestick appears, wait for the price to pull back to the range high. Ensure it doesn't remain at the high for too long. Finally, the price must show rejection at the range high, with a hammer or a bullish engulfing pattern. All 3 points circle around one core principle: patience. A good entry position requires waiting. Never rush in impatiently, as this significantly reduces your expected value. By waiting for a retest, we drastically reduce the risk of fakeouts and avoid getting trapped in a losing trade. Next, there are two classic examples to help you understand more easily. Here is the NQ 15-minute cycle. Wait until the first 15-minute candle close. Drawing your 15-minute range and switching to the 1-minute chart, you need to satisfy three conditions. First, a valid breakout. Look at these two options. 3 seconds to think. Which one is the effective breakout? Left or right? Just like I said before, a valid breakout needs momentum. A large body candle with over 50% closing outside the range, supported by high volume. Second, wait for the retest. After a valid break, look for an FVG or a retest of the range edge. As I mentioned earlier, this confirms support and significantly increases your risk-to-reward ratio. Third, risk management. For your stop loss, where should the stop loss be placed? We can use structural or range high or low for the basis for defense. And we can set a fixed 1R or 1.5R ratio for every trade. Let's see what happened next. The price hit our TP perfectly. Let's look at another example of Tesla. First, open the Tesla 15-minute time frame. Then mark the range with high and low. Quickly switch to the 1-minute chart. You must confirm the first key point, an impulse move, ideally with FVG, and it needs to be accompanied by increasing trading volume. Next, patiently wait for the price to pull back to the FVG or the range. Do not rush. After the price pulls back, observe how it reacts. We want to see the engulfing candle. Before entering the trade, Once the above conditions are satisfied, you can confidently enter the trade. Then, leave it to the market and wait for the TP. Alright, hope you enjoyed today's sharing. Remember to hit the like, subscribe, and share buttons. And don't forget, trade what you see, not what you think. This is Trader JK Lab. See you next time, and Merry Christmas.